So to put that into numbers for the audience here, New York grew 82.5%, which was about a $740 million increase from 2024, growing to a $1.6 billion market. So to put that in perspective, a mature market like Michigan is a $3.2 billion market. So it's still half the size of Michigan's market. I'm not sure population. I have to believe New York has a larger population than Michigan. So yeah, so I think that just shows you that this is still an emerging market. And if we do this again in January of 2027, we'll probably be saying the same thing. Oh, New York grew. Now it's a $3 billion market. Just as it continues to scale out, stores continue to open, brands continue to start operations, and so on. That's a story that for sure I think we'll keep giving this year, just what's going on in the New York market, for better or for worse sometimes, depending on the headlines that New York seems to be making.
Just for
Yeah.
clarity, New York is about 20 million people and Michigan is 10 million people. So twice the size. So a lot of room for growth there.
Definitely bigger than Michigan. Yeah, so a huge amount of growth. Michigan has some unique geography situations bordering markets like Ohio, which are now one of the success stories as well. But I think when you look at Ohio pricing and you look at Michigan pricing, although I read recently Ohio's trying to do something related to cracking down on products coming from across state lines, but I think Michigan drives a lot of sales, not only from their own constituents, but from the bordering states that have more regressive regulation around cannabis. So it maybe punches above its weight from a population perspective. But I think New York is certainly can achieve, it should be like the number two market, really. I think California, from a population, from a maturity, will continue to be number one, but New York should be number two. Right now, California is number one and Michigan is number two from top line sales.
And one of the things about New York is that it has been able to hold on to premium pricing as it's been emerging and moving more towards maturing. So you'd think that with premium pricing there, that you would see them getting closer to that $3 billion number a lot faster than if they were launching with a more price compressed environment.
And that's like Michigan in a nutshell. You can get the cheapest
Mhm.
products. It's a volume game in Michigan, right? Everything is significantly cheaper than even a market like California. And I think that is a good call out, AnnaRae, on New York. We do see most new markets, they follow this playbook. Prices are high. And a lot of that just has to do with supply and demand and availability, competition. And then as it grows and scales, that changes. And you look at markets like Oregon, you look at markets like Washington, markets like Michigan, very competitive, very low prices compared to other markets. And I think New York and any emerging market, frankly, has an opportunity to hold the line. I think as it gets more competitive, certainly there's pressure to start to discount, to start to sell, to price things lower. But I think looking back, probably a lot of markets, if they could make the decision, not that's a decision you can make so easily with everybody, but just, hey, we want to try to maintain prices as best we can. And this is stories I hear from operators in states like Washington. I'm out here in Seattle, and I know a lot of operators are frustrated by the kind of pricing and discounting from other operators that happen that forces them and it brings everybody down. And it's hard to turn that around because once consumers start to get a sense of that, this is pricing, to bring those prices up is very difficult in a market.
Are
Another
there
example,
any
yeah.
are there any maturer markets that have bucked the trend a little bit more than the others, or do they are they all falling into this? Like New York, sure they could defend it for a while, and they seem to be evolving a little bit slower than some of these markets. But what are the chances that they're able to avoid this, or is it just like an eventuality for every market?